Explore opportunity.
So, Formation Metals, CSE FOMO, is a new company that we at Gold Invest are looking at closely at the moment, as CEO Deepak Varshney is bringing in a new project that already has a large historical gold resource on it. We want to hear more about that and about how Deepak plans to leverage this brownfield assets. Welcome, Deepak.
Thanks for having me.
So Deepak, as an audience, has not been introduced to Formation really and the N2 project. Please give us a 60-second summary, like an investment pitch, if you will.
We're a gold company in a thriving gold environment, well-structured, well-funded. So what that means is when we were putting this company together, our focus was making sure we had a lot of strategic shareholders who would let us grow the company. You know, with $2 million working capital, we have about 2/3 of the company held by strategic shareholders. And this is an environment where having a strong gold project will help you as a company grow and thrive. And that's what we're doing here. We acquired an asset from Wallbridge Mining, great pedigree. And so we're here now to be the next big Quebec Junior.
Okay. Well, that's certainly an ambitious plan, but hopefully it will come about. Let's get into the details here. The project we're talking about is called N2, really, if I have that
That's
correctly.
Right.
Tell us a bit about its size, its location. What are the neighbors? Is there infrastructure available? Is it on some important geological feature?
Sure. Well, so it checks off every single box that you look at, right? This is a well-developed area. It's in the Casa Berardi Deformation Zone in the Abitibi. I mean, this is where they produce over 200 million ounces of gold over the last 130 years. So N2 came to us through Wallbridge Mining. You know, they'd worked on this asset. Agnico Eagle worked on this asset. And this was something that's been driven forward over the last 30 years or so. And we're excited to pick this up. So it's got 870,000 global ounces. It's a big project. You know, we're talking about a multi-kilometer system that really has not had much drilled out. About 30% of the strike's been drilled. That's where we get the upside on this project, right? I think the pathway you need as a company in this market, 3 million ounces. We believe we have an opportunity to get there. And ultimately, we're in an area that's been, through a lot of production. Historically, there's producing mines right now. There's a mine that was as recently as 2022 and producing about 10 kilometers from us. So great area.
Okay, sounds like it. So let's get in a bit more detail. You alluded to it. You said it's been worked on the project for the last 30 years. So it goes back to the 1990s, 1980s even. Can you tell us a bit, in summary, what have been the findings, not in terms of ounces, you alluded to that already, but kind of zones and structures did you find out?
There are 6 zones on the property, and really the work on this project really got underway in the early 90s. Cyprus came out with the resource in 1994. This is a very big, your typical Casa Berardi style mineralization here, where we have big structures, multi-kilometer, widely disseminated. I call it boring sexy, right? When you have high grade, we have high grade on the property too, right? We have some, the RJ zone is our high grade zone, 55 grams over a meter, 48 grams over a meter, 29 over 2. So high grade gold, but this is boring sexy. That's what we're focused on. The A zone has 530,000 ounces. This is one of the 6 zones. And only about a third of the project's been drilled in this area. So there have been sparse mineralization or sparse drilling done outside of this area. And that's because the price of gold in 1994 was $300 an ounce, right? End of the day, in 2008, which was the last time this project was drilled by Agnico, they made a discovery and then they stopped. 2008 was the Great Recession. People are paring back on exploration efforts at, again, $800 gold, right? Here we are in an environment, we're at 3,100. I think it's going to keep going. And so all of a sudden, 1.5 grams per ton becomes very sexy. And we have, just like I said, in our main zone, we have almost 4 kilometers of strike to go drill out. So our focus here is going to be, let's get to 3 million ounces. This is the kind of project where, I think, if you look at actually the half, and I use the cutoff of 0.5 gram, 70% of the holes in the mineralized zones hit gold, right? This is the kind of project where we're hitting gold over and over and over again. And so we're out here to grow this thing to 3 million ounces. That's our vision.
Well, but I think the next first step would be to bring the historical resource up to current standards, NI 43-101.
We're confident in the work that was done by our predecessors on this project, right? Like I'm talking, Wallbridge, Agnico Eagle, Cypress. Like these are big companies. They understand what they're doing. I think the exciting part of this project, which is what's really going to get everybody, what's going to get everybody fired up, is the pathway to 3 million ounces. And that's not going to come from working on what we've got done before. We are going to eventually get to bringing that resource current. But the way I look at it is the market is not going to reward us for playing safe.
Probably
And
not. No.
re-drilling historic holes is a safe way to approach a project.
Mm.
Again, A zone, 4 kilometers. What I want to go do is let's go do step outs at half a kilometer, right? Let's continue because it's not complicated drilling. The mineralization is near surface, right? We're talking, one of our best holes is a 90-meter composite where it starts at about 10 meters vertical, right? So we're not talking about deep 500, 600, 700-meter holes. We're talking about drilling, the average 55,000 meters on this project, the average drill hole is only about 250 meters in length, right? 70% of the mineralization in that global resource within the first 200 meters. So for us, it's let's step out, let's make discoveries. That's what's going to drive shareholder value. And we will, of course, also be working on historic work because, we want to say that we have that old resource. It's our resource. So, but the exploration upside, that's what we're focused on.
Okay, interesting. Well, you already outlined what you're going to do big step out holes or drill holes there. But can you give us more detail? What are the next steps? What are the next work steps you're going to do?
Since we acquired the property in January, we've been hard at work just understanding the project better. As I said, it's almost 55,000 meters of drilling. Wallbridge gave us this huge data set for us to now work at and look at. Some of the simpler things, for example, is there was a 0.5 gram cutoff used in the 1990s, which made a lot of sense. Gold prices being where they are, we see resources at 0.3, 0.25 cutoffs. Just understanding system better, the database better has taken time. That's where we're now able to come out and confidently tell you this is how much gold we had. This is how much, the percentage of mineralized. Like I said, 70% of the holes in that area and the zones have hit. We only know that because we've dived into this database. And so next steps are, let's get a drill permit out there. Let's go meet with the First Nations and let's go do a bit of work. I like to measure 3 times before we cut. So, we'll do some more geophysics, but largely, a lot of the work that Wallbridge has done over the last decade has been target generation. So this project is drill ready from that perspective. We have targets that they've identified, which we really like. For us, it's just really wanting to hone in on the drilling. I want to drill this project in the next quarter. That's my goal. And ultimately this year, drill 15,000 meters.
Okay, 15,000 meters, that's a sizable program. That's correct. Let's talk about, I'm not sure if I got that what you told me earlier, or if I remember correctly, 15,000 meters, that's even if it's only 200 or 300 meter deep hole, that's going to cost some money. Do you have that in the cash? Do you have to go back to the market? Or
So the nice thing about how we've structured our company is we did a financing, which was largely done by strategics. And those warrants that came with the financing are in the money. Those are warrants that we don't need to sell into the market. Those are people who are willing to support me, support the company. Our biggest shareholder exercised a $600,000 warrant, right, to help fund the company. And this is really kind of our secret sauce is we don't need to go to the market to ask for money. We can self-fund this. We got $2 million working capital. The only thing we would go to the market for, honestly, is if we wanted to do a charity flow where we would minimize dilution. But that's our focus, right? We want to look. We can drill right now comfortably with the money we have in the till, 3,000 to 4,000 meters. But we want a much bigger program, and we're going to do that through the combination of warrants, right? And ultimately, as we grow the story, a charity flow.
Oh, good to know. That's certainly a plan, and hopefully you can minimize the dilution that way, which is, of course, a good position to be in. Even with $3,100 gold, a lot of companies have problems funding themselves. Right?
Well, right now we have over $5 million with the warrants that are in the money. So
that's not a problem for you there.
Yeah, and they're ready to be exercised when we ask people and say, hey, we need some more money, and they're there for us.
Okay, that's great. We know the goal is 3 million ounces. Let's say you get there. When you're there, what's the next step then? Is that finding someone to take you out, take the company out, take the project out.
100%. I want to be the farm team for these bigger companies, right? End of the day, a lot of the seniors, these majors, they're not focused on grassroots exploration. They're not focused on, projects like N2, which are more advanced. What they want is M&A. They want to go buy these ounces, and that's the niche that we want to fill, right? We want to go develop these projects to a level where now they're comfortable taking it out, and then we can go and focus on our expertise, which is acquiring assets you think about this property, if we pay out the full option, will have been acquired at $1 an ounce. That was our cost. We found this, we did a deal at $1 an ounce. That's fully paid out. Our upfront payment for the project, 20 cents an ounce. You think about that. I mean, that's what we're focused on. How do we create value? We find projects that we can acquire at very attractive valuations. We advance them to a level where we think they'll get taken out, and then we focus on others. So we right now have other projects we're actually evaluating as we speak. There's a lot of opportunity in Quebec. We're fortunate to be in a position where we have great balance sheet, great structure. We can go out and take advantage of a market, what is a depressed market, take on one or two more projects, which we can get at a similar valuation where, we have an advanced asset coming into the company, growing our portfolio, and then driving those projects forward. And that's how you create value, right? You buy an asset for $1 an ounce in this market. I mean,
yes, this sounds like a great deal there you made there. Yeah, I'm certainly, full disclosure here, we would be happy to go it all as planned because we're shareholders too. But for all of those that are not yet, to round things off before we got too long here, just give us your summary. Why should people have a closer look at the company right now, or should consider taking a position now?
People want to make money. They want to see, and you only get that in the junior mining market when you come into a company early on and you watch it grow. I think when you have a more mature company, there's a lot of different things going on that are out of control. But when you have a junior and you come in at an earlier stage, you have a lot more opportunity to see a return on your investment. And that's where we are right now. We're well funded. We're in a position here where we have, if you include the money in the warrants that we can bring in, we have over $7 million between our working capital and those warrants. We have a great share structure. 2/3 of the company is owned by strategic shareholders, management, insiders. My family, we're the largest shareholders in this company. We've done over the last 3 decades over $100 million worth of deals. We actually understand this industry, this business. This isn't our first time working on something. We're in a thriving gold market where this project's really only been touched, like 30% of the project's been worked on. Again, like, this is a very simple system. It doesn't work that way, but the fact is, as I said, the main zone, 1/3 of the strike's been drilled out. We have over 15 kilometers of strike on this project to be drilled still. And that's a lot, right? You think about the fact is we've got almost 900,000 ounces off of about 4 kilometers of strike. Well, we have another 15 kilometers to go here. And that's where you're going to see the discovery. You're going to see the upside. And that's where you get the biggest return when you're investing in the junior. Early on, great structure, great balance sheet, great project.
Okay, well, that certainly sounds like a good closing remark there. Thank you very much, Deepak, for taking the time. And we'll be sure to talk soon then when things get going. Thank you.
Awesome. Take care.
Perfect.